This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, and we've been selling homes here in Southern Nevada since 1988. We're also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. And we also have Bill Nelson, who's with Piercy Bowler Taylor Kern. Welcome back, Bill.
Harvey, it's great to see you. Great to be here.
Glad to have you back. You know, you were in the pre-show, you were mentioning a little bit about your neighbor telling a story about an employer perpetrating a fraud on his employees.
Right.
Tell me about that.
My neighbor is a professional person, and their employer during 2016, stopped giving pay stubs to them, and that was a red flag. And they said, "Why did you stop doing this?
Yeah.
And when are we going to get our pay stubs so we can, keep track of these things?" And he said, "Oh well, we'll get those to you, at the end of the year. We'll get your W-2, and you'll get all your information." And they said, "Okay." The year rolls on, and right towards the end of the year, the employer finds himself in a little bit of trouble and shuts his doors down, and eventually finds himself in prison. So the employee goes, "Well, when do I get my W-2 and stuff?" And they're contacting the people they can, and eventually they did get a W-2, but it was for much less than what they were paid, because the withholdings, the Social Security withholdings, had to match what they were paid that were actually paid to the government. And so what happened was, allegedly, in my mind, this is what happened. The employer withheld the wages, paid the employees the net amount, but then did not send the money into the government.
Does that employee have the liability for the taxes that weren't paid in, and what's their exposure? Do you have any info on that?
Yeah, the employee has the liability for the income tax.
Right.
So they receive net dollars on their paycheck, and now the IRS is still going to say, "Oh, but you still owe me the federal taxes on that money," which I know the employer was supposed to, but didn't. So now it's your responsibility.
Exactly.
Wow.
One thing that employers and companies have an issue with is tracking receivables, and this is something that fortunately for us, it's not as prevalent. Although in our property management part, we have to deal with some receivables. But you have some philosophies about managing those receivables.
I do. Receivables are a crucial part of the business. First of all, they show a health of the business. As the business grows, receivables go up, they increase. But you always need to look at the age. Check your aging. How old are your receivables? Are they current, or how old are they getting? If they're getting too old, are they really receivables? How can receivables be too high? Well, like I said, if they're getting too old, then the receivables can go up, and you need to collect on those, because you want to be as liquid as possible.
Right.
You can't. It's hard to pay your accounts payable, or the payments you owe to your vendors with accounts receivable.
Is there a formula, or is there a certain number of days that we need to be thinking about, Bill, or it depends upon the business?
It depends upon the business, but keep everything as current as you possibly can. Don't let things. You always want the highest amount in the current column, and then if it goes out a little bit, that happens. Sometimes, depending on the business, it's normal for things to be 120 days old. That's normal.
Right.
But a lot of businesses aren't that way, and if you're not, be out there after your
in medical practices, that's common. The collecting on insurance and those things takes a while.
Exactly, and some contractors and and things as well.
You've been listening to Las Vegas Real Estate Now with host Harvey Blankfeld. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.